Welcome back. In the video about treasury bonds and infrastructure bonds, I told you that once you have bought the papers, once you have bought the bonds, you can dispose them in the secondary market. And so I'm getting some comments or some questions in my inbox querying how to go about the secondary market. And so in this video, I'm going to explain to you the difference between the primary market and the secondary market and how you can go about these two markets. So at the end of the video, you'll have a very clear understanding. When I say secondary market, you'll be able to know instantly what exactly I'm referring to. Or when somebody says primary market, you'll be able to exactly know what exactly the person is talking about. Stick around. In every bond issue, you'll have participants in this bond. Now, some of these participants are, number one, you'll have the issuer or the borrower. In our case, it's going to be the Central Bank of Kenya, who is borrowing on behalf of the government. And then you'll have the investor. This investor is you, who is buying this paper. Or it's me, who is investing in this treasury bond, treasury bill, or in the infrastructure bond. And then we'll have some intermediaries, the brokers, the nominees, and what have you. But I only want to explain the market, the primary market and the secondary market. So I'll leave the brokers out of this. I'll leave the intermediaries out of this. We are going to focus on the issuer and the investor, which is you or me. Now, when CBK issues a bond, when CBK wants to borrow, when the borrower wants money, CBK wants to borrow from the public, it wants money, it will issue a paper. This paper will have the terms of the bond. Will have the terms of the bond. These include how much they are seeking to borrow, how much they are seeking to raise from this paper. We've always seen 75 billion, 30 billion, 50 billion, whatever amount they want to borrow or they're looking at raising, they will have that in the paper. They will also have the coupon payment dates. When will coupons be paid on this paper? This is a new issue I'm talking about, yeah? When will coupons be paid on this paper? They will also have the tenor. How long is this paper? Is it a 5-year-old bond? Is it a 10-year bond? Is it a 15-year paper? Is it a 30-year-old paper? The maturity of this paper will be entailed there. They'll have the dates, the settlement dates. When do you place your bid? When will the auction happen? And when do you have the results? And when should you have made the payment for your investment to have been deemed successful? Now, when CBK issues these terms, communicates these terms to us, you have two options. You can either go to CBK directly and buy the paper and invest. That is, when you have a DAO CSD account, you can log into your DAO CSD account and invest in this treasury bond. You can put a bid yourself in the DAO CSD account. Once the results are out, you go to your bank and remit payment to CBK. Now, that market, you see, it's a sale. CBK is selling to us. Now, that is the primary market. The primary market is where you buy directly from the issuer of the bond. You can either buy yourself or you can buy from CBK through an intermediary. You can instruct your bank to buy this paper for you from CBK. Of course, that's something that your bank will be doing on your behalf. So you're bound to pay a commission or to pay some service charge for the convenience your bank is selling to you. That's a primary market. A secondary market now, you have bought this paper. Remember I told you, when you want to have your money back, you can either wait for the redemption time when the borrower will be paying back your investment, when CBK will be paying you money, or you can go and sell it into the secondary market. So this is our secondary market. What is this secondary market? How is it like? Now, the secondary market is where people who had bought this paper from CBK at the point when CBK was issuing this paper can sell. Assuming I had invested in the latest IFBs worth 50 million. I went and bought from CBK directly. Either I bought myself as an individual or I bought through my bank. Now, I want to offload some of these amounts. Why? Because I want to use the monies, or I want to, maybe the stock market is okay for me to jump into. So I would like to offload some of my bonds and buy a bit of the shares. The shares have come down and I want to buy as I wait for them to go back up for me to sell and make my gains. So I would either as a last resort go back to CBK and request CBK to buy back whatever I had bought from them. That's called rediscounting. When you do that, CBK will penalize you, will charge you a certain amount. The option that is available, the first option, is selling it in the secondary market. So this secondary market is a place where people who had bought the bond in the primary market can sell. Now, when you're buying a bond in the secondary market, you're not buying the bond from CBK. You are buying the bond from Berlin. You can be buying it from Absa Bank. You can be buying it from KCB. You can be buying it from ABC, money market fund, who had bought it and is now selling it. You buy it from people who had bought it and are disposing their investment. That is the secondary market. You're buying it from a second party. Now, when you buy this paper from the second party, if, for instance, in the primary market, when let's say, for instance, it's the treasury, the infrastructure, the IFB, which was auctioned at 13%. That was in 2022. In 2023, sorry, at 13%. That was the prevailing rates then, yeah? I had bought a bond worth 10 million in that primary market back in 2023. I want to sell it now. The prevailing rates now is at 16%. I have a paper at 13% and I'm selling 1 million. Out of my 50 million, I am selling 1 million. You, the person who is coming to buy this coupon from me, once you have bought it, you remember these are fixed income securities. So the price at which I had bought it from CBK is the exact rate of interest, is the exact coupon rate that CBK will be paying on this specific paper until maturity. So if I'm selling it, you will be buying it from me knowing very well that now the rate's at 16%, but you are buying a paper from Berlin which carries with it a coupon rate of 13%, because that is the rate at which I bought it at. These are fixed income securities. If I'm selling to you a paper which I bought at a rate of 13%, remember CBK will continue paying you coupons at 13%. At a time when you have a chance to buy from the primary market a paper worth 1 million at a rate of 17%. Would you come to buy my paper? Definitely not. So what options do you have? For me to make my low coupon paper attractive to you, I will give you at a discounted rate. I will discount it for you. As in, I'll give you a paper worth 1 million, but ask you to pay me maybe 700,000 or 800,000. It's a free market. We agree. We'll negotiate and agree. And for you to accept to take this low coupon, you will want me to sell it to you to discount it for you, so that you are compensated. The difference between the 1 million value of the paper and the 700 which you're buying it at compensates you on the low coupon you'll be earning from this investment. So I will receive 700,000 from you, the new buyer who is buying it from the secondary market, and I will offload my 1 million to you. So then on my investment of 5 million, CBK will continue paying me interest on the 4 million, but 1 million will be transferred to you. So you'll continue receiving coupons on the 1 million at 13%, the rate at which I had bought it at, because this is fixed, even though rates are now at 17%. That is the secondary market transactions. Now, it follows that if I buy a paper now, when it is 17%, I have invested worth 100 million. And a few months down the line, or 1 or 2 years down the line, I would like to offload my investment. I've been earning coupons on my 100 million investment at 17%. Now, 2 years down the line, the rates have come down. They are now at 10%. Now, treasury bills are being auctioned at 10%. The new issues are now at 10% or maybe 11%, thereabout. And I want to offload my paper. I have a need for these amounts, money. I need to sell part of my securities. Remember, the prevailing market rates then will be lower than my coupon. My coupon is 17. If I continue maintaining this, I'll be earning 17%, and the market rates are lower, is at 12%. Everybody will want to buy these papers off me because my paper has a higher yield than the prevailing market rates. My coupon rate is higher than the prevailing market rates. My paper is more lucrative. It's more profitable than the prevailing market rates of 12%. Now, because I have a higher value paper, I will not give you 1 million and you give me 1 million. Apana. Because I have a higher coupon than the current market rate, you will not give me 700,000 and I give you a paper worth 1 million, like in our previous case. Apana. I will sell it to you at a premium. Why? Because I'm holding a premium paper at that particular moment. So I'll give you my investment worth 1 million, but I will ask you, for instance, to pay me 1.4 million or to pay me 1.3 million. Why? Because if you go to buy from the primary market, or if you buy it with the prevailing market rates, you're going to buy it at 12%. So by taking my paper, which is sold at 17%, which carries a coupon of 17%, you are gaining. And I'm not going to give you that gain for free. You're going to pay for it. So you'll pay me slightly more than the amount I'll be offloading to you. So that is how the primary market and the secondary market comes about. Now, in the primary market, I told you, you can buy directly from CBK. In the secondary market, you have to go through a broker. Remember, for me to offload, I don't know you. You who wants to buy my investment, I don't know you. So there will have to be a go-between between us, a broker. This broker, his responsibility or their responsibility is to identify you who wants to buy, identify me who wants to sell to you, negotiate the pricing on our behalf, and then bring us together and transact on our behalf. After I have sold to you, CBK will now continue paying you, will start paying you coupons at the rate at which I was being paid at. And on the redemption date or on the maturity date, the payments, the 1 million rather, will be made payable to you and not to me. So that's how the secondary market and the primary market plays out. And this is applicable to all bonds market, even in the commercial bonds. It's applicable to all bonds market, whether here or US or wherever. That is how it plays. The primary market and the secondary market. Press the subscribe button.